Okay, this is the blog post for January 3rd, 2011. We'll start by going through all the currencies. This one has a weekly trend that's slightly up, the monthly trend's down, and obviously the daily trend's down. I primarily focus on the weekly trend. So if the market's trend is down and it goes to or below the lower containment bands but isn't that weak, I'll look to buy, but in this case it was. So you might have sold this little up move right here, which didn't pan out. The market did pull back about 10 or 15 pips, so shouldn't have been worse than a break-even trade. And we have a nice 1, 2, 3 pattern here right on the bottom. The weekly trend's up. You might have taken that trade. And usually it's a safer trade once the price is above the hourly, but you have these fib levels up here, which are likely to stall the price. Anytime it goes sideways right underneath the hourly and breaks out, that's a pretty decent trade. The market went up to this fib level. Aggressive traders might have looked to sell there. And once it breaks underneath the hourly, you might have gone short right here with a tiny loss. A lot of times the false breakouts happen, and again, if you trade in the direction of the weekly trend, I find that you have a higher probability. So you buy this breakout right here, and you can see the price shot up about 75 pips. You're looking at this as a possible place to get out, and then when it shoots through there, the next fib level is the next place, and you can see it just pretty much went up right to a few pips away from our upper statistical likely high and our trading zone predicted high, and that makes a great place to get out. Because of this extreme strength, you might want to look for a pullback right here in the upcoming time. Dollar Swiss. This one has a daily, weekly, and monthly trend is down, but however, the price is above the hourly. So normally you want to look to sell, but you can't sell these NR breakouts when the price is above the hourly. You got to buy the breakouts up. And because the weekly and monthly trends so far down, it's not really likely to go up too much. So you might have really avoided buying this breakout here, and when the market came down to the hourly and went sideways right here, you might have gone short right here around a little bit before 7 with your stop above the previous swing high, and you can see the price fell about 15-20 pips. That was a decent trade. You might have also looked to sell this right here when it came back up to the hourly, and you would have had a small loss there. And then when it broke the hourly right here, you might have gone short. It pulled back enough that you would have moved your stop down a little bit. You might have got stopped out with a 5, 6, 7 pip loss. You go short again here at 50, and you can see the price fell 30 pips. That's trading for you. You're going to have small 5, 10, 12 pip losses, and frequently 10, 15, 20, in some cases 30 pips like this. Even on a currency that didn't move that much, there was pips to be made. Pound dollar, the weekly trend just barely up, and it was down a little bit on Sunday. The monthly trend's down. When they're both one slightly up and the monthly slightly down, I mainly look at the hourly. If it's underneath the hourly, I want to sell it. So here's this fib level here, likely resistance area because price was underneath it. We're underneath the hourly, and there's no clear, super strong weekly uptrend. The monthly trend's down and daily trend's down. It's a pretty much no-brainer. Yeah, the NR pattern right here. Last night you might have gone short there with a small loss, and then you went short again right here, and the price fell about 75 pips. I probably would have got out of the trade here at the previous month's low because it's underneath the lower containment band and the weakness wasn't that much. And I probably would not have sold right here. Anytime you're underneath the lower containment band, it's pretty risky. There was a trader yesterday that took a trade like this by buying it above the upper containment band last week and lost pips on it. Here's an instance where it works. If you are going to take a trade like that, go down to a 50 tick chart and be very careful. Be super quick in tightening your stop to break even, and if you can make 15-25 pips, don't be greedy. If it goes to another support area like the 10-day moving average right here, great place to get out. And because you have a double bottom here way underneath the lower containment band, it was pretty weak here, less weak, and almost no weakness at all. Great place to look for a counter trend trade, and especially there's a flat bottom wedge pattern right here. You have slope down highs, flat bottom. The weakness isn't that much. Anytime you're underneath the lower containment band, the weekly downtrend isn't really that severe. If it's blood red, I wouldn't do this kind of trade, but it's a pretty decent trade, and you made about 30 pips on the pullback. Because the trend's down, when it comes back up to this fib level here, it became support, and once support gets broken, it becomes resistance. Good place to look for shorts. It was pretty strong at that point. That's why that trade kind of fizzled out. But the double top right here with almost no strength, we're underneath the hourly, all the trends are down. This is a no-brainer, and you made 50 pips on that trade. You never know what you're going to get. Sometimes you're going to lose 5-10 pips. Other times you're going to make 5, 10, 15 pips, get stopped out, and then have to get right back in it again, and sometimes you make 50 pips on the next trade. It's that simple. Here's the Australian dollar. Now this one has a weekly and monthly trend that's up. However, we're underneath the hourly and we have a major fib level here. It's not likely. Once it breaks through there, then it's very likely to go up to this next zone here. But when it's underneath the hourly, you probably want to avoid this currency because it's so strong longer term, you're not likely to make much selling it, and you got a major sell area here. Once it breaks above this upper zone of this fib level, the next likely selling is all the way up here. By all means, buy it at that point. And you might have also considered buying this double bottom right here because there's a little bit of weakness the first time and none the second time. The longer term trend's up. This is a decent, 15 to 20 pip likely trade. It's probably 70% likely to work because of how strong the longer term trend is. The New Zealand yen, I would have totally avoided this one because, for one, the weekly monthly trend's up. And it's underneath the hourly. If you did buy right here, the next likely profit target's only about 10 pips away. This one continued on up to the next resistance area up here, but you're not, a lot of times it's going to stall here and come down. So this is an absolutely perfect example of one that you should just avoid. It's because it's underneath the hourly, you normally want to sell, but the longer term trend's pretty strong. And you have this resistance area here. You don't really know what's going to happen in this one. So this is just one that is a perfect example of one to just, not trade today. Along with the New Zealand dollar, which also stuck between two fib levels that are very close together. Now, the longer term trend's up, but you're underneath the hourly, and so until it breaks this upper fib level, which in this case it did not, the New Zealand yen did a little bit, but this one didn't. It stalled there and came back down, but the longer term trend is so strong that you really don't want to be looking to sell this. Here's a good example of a currency that's longer term trend was down. So starting the day off last night, you might have looked to sell here, sideways multi-hour rectangle pattern sell right here, and the market only pulled back about 15 pips. That's more than enough to move your stop to break even. You might have sold here at the hourly, which would have given you 15 pips. And once it breaks above the hourly, you can look to sell it at the upper containment band and the upper fib level here because the longer term trend was down starting the day off. But again, once it's above the hourly, it's more likely to go up. You might have bought this breakout here. Now the longer term trend is down, but the next resistance sell area is about 20-25 pips away. So will you risk 10 pips? Let's say this is a 50-50 shot. Will you risk 10 pips for a good chance of making 20? This went up and had pretty decent strength. There was no weakness on here. This is a counter trend trade, but if the profit target level is far enough away, you can take a stab at those. Dollar yen similar. We're above the hourly last night. You can see more momentum to the upside than the downside. The longer term trend is down. Probably the only two trades I would have taken in this currency was this multi-hour wedge pattern breakout right here, and when it went sideways right here I would get out because again you're going against the trend. And then you have this narrow range pattern right here. You go long right here. This is your first profit target, so when it went sideways right here I would have got out half of it with only a 5 pip profit. Draw my fibs on the second half. And this is a good example of one that went up to the 1.618. I would have got out of the whole trade right here. Not much profit in the second trade on this, but the first one was decent. Here's a perfect example of pure trend trade. The daily, weekly, monthly trend's down. We're underneath the hourly. We have a narrow range pattern. So when this goes short right here and breaks out through the low, you go short, and you can see the price fell about 40 pips. And on the way down, did not have that much momentum, so I probably would have got out of the whole trade right here at the lower containment band. Counter trend buy signals, there's no momentum, and I would have been out. And normally if this had more momentum down like this, I would have gone short right here. I probably would have passed on this one. If the longer term trend wasn't so weak, you might have, when you saw this multi-hour sideways range, bought right here. When it came up to the hourly and came back down, I would have gone short myself right here. This trade didn't work. You would have moved your stop and probably lost 6 pips there. And anytime you see it kind of break above the hourly and pull back not much and come back up, you want to buy the breakout here, especially when it has a a nice peak. This is the most momentum of the day, and you'd get in that trade with the expectation of making a pretty decent profit target. Here's your fib level up here. It's probably 20-25 pips away. You're going to risk maybe 12 pips, and it comes up and it doesn't quite hit that level, and look, the upwards momentum is less than it was before. So our software told you that, you know, you're lucky to get that 15-20 pips, get the hell out. And if you're an aggressive trader, you might have gone short because the longer term trend's down. If you're scalping, this is a great scalp. The hourly usually is your profit target. You make 20 pips up and 25-30 pips down. In this case, it shot through the hourly and came down to the monthly pivot level here. CAD yen's kind of a mixed trend. The weekly trend keeps shifting from up to down. The monthly trend's just slightly up. We are above the hourly, which means it's more likely to go up, but we have a major fib level here. So just like I said before, I wouldn't buy this until it really breaks out above this upper level here. So it came up, came down, and you would have expected possibly the market going lower, but it didn't. Found support where there was buying all day. So when it broke above here, this is a pretty safe trade. The monthly trend's up. The weekly trend's really not that much down. The daily trend's pretty strong up. There's no real momentum today. But once it breaks off, here's your first profit target. I would have got out of half the trade there. And then you want to draw your fibs on that first swing. And the fib targets, I probably would have got out of the second half of the trade here because it was actually losing a little momentum. I would have got out about 10 or 12 pips a little bit too soon. But decent trade. You're in around 82.05. You would have made maybe 12 pips on the first half and 22 in the second, so you netted about 18 pips on that trade.